Prada. Too many new stores and not enough products seems to be the reason why Prada is struggling here. How does it turn that around?
Yeah, absolutely. So Prada definitely needs to get a better control of its own inventory and also a better understanding of its current consumer. One of the things that we track at Bomoda is the overall global consumption of emerging markets and of international consumers like Chinese consumers. And what we saw with Prada was actually a build-out in China ahead of demand, or actually in substitution for actual demand, which means Chinese consumers travel to Europe and travel to Japan. They don't necessarily want to buy Prada in China, yet Prada spent a bit too much time trying to sell in China rather than in the markets in which those consumers were actually looking to purchase.
Lori Wachs, weigh in here. Is this a problem specific to Prada? Because other companies like Gucci, Louis Vuitton, or Hermes are probably doing a little bit better in terms of managing their inventory.
Well, it really is company specific, because some of them, like Gucci, have really overbuilt their network, like Prada did as well, whereas Hermes has had a much slower, more methodical approach. The pricing differential, even before the big currency swings, was pretty big. Up to 2 times as much as what you could buy it for outside of China. And there was a time where the Chinese couldn't travel as much. But as those visa restrictions have lifted, they are traveling in droves, especially given the currency swings. And so you're seeing big decreases in China, and you're seeing Europe purchases by Chinese consumers up somewhere around 80%. So it's a very dodgy, dynamic situation, and I understand why they thought they wanted to build it out for the long term, because they had strong brand equity, but it does look like they pushed it a bit too far.
Okay, perhaps they pushed it a little bit too much. Brian, wasn't it the case that a lot of these retailers, these luxury brands, were starting to charge higher prices in their home countries across Europe to sell to these Chinese consumers to make up for the fact that a lot of the sales were taking place in Europe rather than in China?
Yeah, that's a great point. So brands have actually tried to change the pricing dynamic, but what we found is price is only a relatively small part of a larger pie. So why do Chinese consumers travel to Europe? Why do they travel to Japan? Why do they travel to North America? First, for authenticity reasons. They want to guarantee that the product is real. Second reason, product quality. There's a perception that what they buy in Europe is actually higher quality than what they buy in China, even if it's the exact same item. And also the experience of travel is becoming more and more important to the Chinese consumer. So remember, last year you had 100 million outbound trips by Chinese consumers, yet only about 6% of the overall Chinese population has a passport. So we think this is a really under-leveraged, under-penetrated area of what should be a big part of the retail market for the next 10 to 20 years.
Let's talk about Asia as a whole, because it also includes Japan. And once upon a time, Lori, Japan was a big part of these luxury companies' portfolio. That's been overshadowed by the rise of China. But if you look at Tiffany's latest numbers, for instance, Japan sales were up 21%, while Asia-Pacific sales were up 6%. Why is Japan doing so well for a company like Tiffany when you have a weak yen?
Well, part of it has to do with where the Chinese customer is now traveling. And Japan has certainly been a beneficiary of that.
Okay, that makes sense. What about the fact that in the United States it's still fairly flat for Tiffany? How come the Chinese consumer is not picking up as much in the United States?
Again, much of it is a function of the exchange rate. And so the U.S., with the weaker dollar for many years, this was the destination, and we really saw that start to trail off about a year ago when the U.S. dollar strengthened considerably. So you hear companies like Neiman Marcus say in gateway cities, we're really feeling it. Luxury goods still doing fine here in the U.S., but when you look at the numbers and it's running up a few percent versus when you see it in Europe running up 20%, you can see people are really following the exchange rate.
One of those gateway cities, of course, Hong Kong, Macau. To what extent do you worry about the Hong Kong currency being under pressure or disappearing, given all the turmoil that we've seen in mainland China?
Yeah, there are a lot of concerns right now in Hong Kong. I think that the political unrest, the over-reliance, but the relative underappreciation for the Chinese tourists visiting Hong Kong created a certain glut of inventory again and of retail stores that now no longer match that consumer demand. The consumer saying, well, Hong Kong was my original point of entry to this market, but now I travel to Tokyo, now I travel to Seoul, now I travel to London and Paris and these other cities. and Hong Kong's really being left on the side. That's a big issue for these brands who have become over-reliant on Hong Kong.
Especially as the rents have stayed high and these luxury brands are trying to negotiate them down again or renegotiate them down. Thank you so much.